Oh. Yeah. Yeah, I saw that. He had like an hour. There's like a doji that was on the hour. I banked this morning anyways. So fine. I got that CPI or the inflation data I was short. Yeah, I didn't trust that like 2-day melt up, but I didn't think we'd run like that yesterday. Creating like a little head and shoulders on the 1 minute right now. Oh nope, and down. I want to stick to the 10 under 15. I mean, when I do futures, I do 15 seconds. That shit's nuts. No, because freaking quarter of a dollar move is money. But a half a dollar moves $25. Oh. Hmm?
Sweet. What does that do? Does it like what does it do for me? No, no, on the referral code, does it like give a discount for a little bit or yeah, it's like yeah, because for the live um for like everything there with no delay, it's $42 a month.
Yeah, but still $42 a month is pretty cheap.
Yeah, compared to like black box, it's $100.
Yeah, so you pay 42.
Send me your referral code, not the link, because when you send the link, just sends me to the website, and I already created an account. So, oh, okay, there you go. Oh yeah. All right, I just paid for it. See if anything pops up for you. Hell yeah. Hell yeah. Now, what about black box? How much do you get for that? Damn. Yeah, that's not bad. Nice. That's pretty cool. Yeah, I think I used your referral code for that too. Yeah. Yeah. Yeah, that's kind of why I went over here too, to see what they offer. Looked like Spy Gap down last night or this morning.
Dude, you get 5% off with another code. Follow the flow is a code for 5% off. Yeah, they don't give any discounts, huh? I bought my car 10 years ago.
You bought your car 10 years ago? Is that what you said?
Yeah, yeah.
Damn.
Oh, it's got a brand. Motor's probably like 1 year old.
You put a new motor in it?
Yeah, I had a recall where there's like metal shavings in the oil
Oh,
and
shit.
locked up the engine. It's like
Yeah.
a free motor. I was like, hell yeah, I'm gonna keep this car forever now.
How's the transmission?
I guess good. I mean, I've driven it probably 3 times in the new year because I work from home, so I don't really go much. If I do, I'd take my wife's car.
Right. What is it? What kind of car is it?
Hyundai Sonata.
Hmm.
I was like, I want a new car, but man, no car payment with a brand new motor. So,
Yeah,
just
seriously.
chill with it.
Paid $400 or $500 a month for just a car payment. It's insane.
Yeah, ours was like 580,
Yeah.
and then my wife totaled her car. I was like, thank God. It's like it was getting a little rough before, and I was like, let's get a super cheap one.
Yeah, I have an Infinity. I pay like probably $700 a month with insurance. It's insane. Shameful. No, that's with my car payment and insurance. But up here in New York, it's like, yeah, I pay like almost 300 a month for it.
35, I don't pay shit for car insurance.
But you're in Florida too, Royal. So that's weird. How'd you did you pay more for the like modifications to it to like insure the modifications? Yeah, that's good. Smart.
Morning, boys. What we thinking today?
Well, depends on Paul.
And he's just doing I mean, it's just a hearing, right?
Yeah, he's doing, I think, the House today and then the Senate tomorrow. Oh, they're gonna drill him.
Yeah, I think so too. I wonder, because I mean, is he politically, quote, whose side is he on? Does that make sense?
I think Trump nominated him.
Okay. So then, yeah, he'll get drilled to the floor.
Yeah, he's Republican.
Yeah, and they'll try and pin a lot of stuff on him. Well, that makes me feel good about my put I swung. A guy I follow on Twitter said, Powell speaking today. I don't know if it'll affect the market at all, but it's just something to be aware of. Yeah.
Yeah, people are saying 9:30, but 9:30 or 10. I don't know. Different times. In front of the Senate. And then tomorrow he speaks in front of the House.
Good morning, good evening. I'm not staying on long again today. I'm gonna.
Y'all looking to short today or long? Yeah, I was thinking the same thing. I was just making sure. I was like, am I being too greedy?
Morning.
Well, what'd you cut at yesterday? Oh, they're going to be $2. Yeah, they'll be. Yeah, there'll be a lot.
Already coming down. I think it might be going up in the beginning. Got a hammer candle. Ooh, it's going up. I'm gonna sit on my hands for the first 10 minutes. Oh. 2 minutes.
Of course, we rock it up. Nope.
Yeah, what the fuck? 6 points up.
They're irrelevant. All supply and demand zones are irrelevant when Powell's speaking. Play off of the news. He's going to be speaking at 9:30.
Yeah, in a minute.
Yep.
So I swung a put. I'm guessing I probably should close, right it open.
Yeah.
Yeah. That's
If
what
I
was
swing
thinking.
a lot, I close that open. It's
Yeah, I mean it's just one.
one of the best things to do. And don't
Yeah.
fall back.
I mean if there's a downward move, I'll catch the real move it'll play. So
Yeah, just catch it back up to a moving average. If it pukes off of the moving average, there's your entry.
yeah, let's see. Down 26, up 76.
open.
Oh, coming down. Oh, and goes up. Quite stable right now, actually.
We're above the anchor VWAP, guys. So, are we? No, we're below that bitch. We're going up to 375.
Oh my god, I bought one. Whoops.
Yeah, we're outside of our channels. Wow. Yeah, we're gonna. Oh yeah.
Oh, Powell's
Anyone?
about to speak, right? Oh, going up.
Mm-hmm.
I will wait for him to speak before I do anything.
Yeah, I have it on the background, so I'll know when he starts talking.
372.07.
Usually when he speaks, it does one big move and then it reverses. So
There's 11.5 on NQ.
US dollar. So let's see what he says. tell me what Powell is saying because I don't want to change the chart. Is there
Ooh, going
anything
up.
that he's saying that could trigger things? Here we go. We're getting some movement, ladies and gentlemen. Book map. Where's that liquidity gone? Look, it's disappeared. Where has it gone? Nice little spoof right there.
Your inputs, roll.
Not that much heavy liquidity. That means it tells me that there are.
I think it's going up, but it might come down right after the next candle.
Actively in this area. Okay, we want to see the big.
That's just me listening to
Here's reality.
Yep, talking about Powell. He's looking at the book map, and there's a lot of orders getting filled right at this key level on the book map. Do you know Thinkorswim offers you book map?
Yeah.
Oh yeah, we talked about that shit yesterday.
Yeah, I was using it yesterday. It's like 40 a month, so much better. It's basically just the data fee.
Yes.
My port's up 10%. I'm done for the day.
Did you get calls?
Yep, right at open.
Boom.
Is anybody else?
Yeesh.
Are
Don't
you
announce
guys
it out
having
loud.
trouble getting filled?
Getting bought up? Everything's getting bought up here?
Yep.
Yeah.
We're outside of our magnetic lines, guys. This is why you don't get puts right now. We're outside of the magnetic lines on regular trading hours, and we're at the lower end of it on extended hours. So we can easily push past the means here, which we did, which is 371, and we're going back to virgin point of control, which is probably going to be 375, which would then tap
Should do
yesterday's
something.
close.
So
It's a
you're
lot
saying,
of volatility.
so you're saying calls.
We'll probably fill yesterday's gap, and then we'll roll over.
Oh, it's coming down again. I think this might be. I think so.
There is 60% buyers, 40% sellers on ES. It's really kind of hard to gauge right now because the market's only been open for 4 minutes, and we are at the 50 EMA on the 30-minute on ES, and we've breached above it, but now it seems that we're probably going to get back under it.
Oh, nice.
Right down.
Is anybody having trouble with how slowly Weeble is like showing orders?
Weeble. I'm not
At
sure.
open, it takes a little bit of time.
Oh,
Oh, I gotta stop down. Damn.
yeah, I'm in the short.
I can't gauge anything off of 10 minutes of the fucking market.
Pretty much stop in profit already.
Yep.
Yeah, it's coming down, I think. Oh, and it can stop.
Yeah, we couldn't even get back above that band. Sheesh.
Oh, coming back up here. This is interesting. I'll start speaking yet.
Shit.
Be a turn point. 20,000.
Are the Nets really about to trade Kyrie to the Lakers?
Really?
No.
No, this is just.
I mean,
I'm not confident on it going down anymore here. The momentum's saying long right now, actually. Kind of interesting.
Telling you, they're gonna push it to test this wick of those sellers up there. Wick fishing 101, baby. You form a wick, and then if you want to really retest it to see if there's buyers, you come back up to that wick to see if they're gonna. What moving average is this?
$37.40. Let's see how that hits.
Oh shit! Where am I looking? I'm not even looking at my ES.
They might be going long here. No? Getting rejected off that 37.40. It's a slow morning.
Yes. Indeed.
Well, I mean, it's like just ranging, kind of. $37.35 has a buyer.
I may be looking at 0-day 375 calls here.
Listen. No, and push back down. Yeah, what's it? Oh, the buyers got bought up.
They pushed it up to see if those buyers, those sellers were there.
I'll
See
have
if-
not even started talking yet. So
Another 10 seconds next candle, so see what
This
that
can-
happens.
this
Big
can be a-
doji right here.
This can be a basing candle. Rally, base rally.
Pushing up. Here's the sellers. See if the sellers push it down or not. Breaks through. Probably gonna go up. Ooh, the sellers are getting here.
no, they're introducing. Mr. Brown is talking, and then they're on Tom Tillis.
This is feeling like a short.
My buddy who works at a prop firm,
There it is.
put in a position to go long on SPY because he saw some bullish momentum. So he has 380 calls for the end of this month.
Yeah, me too.
It wicked 11. NQ wicked 11.5, so we haven't been able to get 11.5.
Just buyers. Remember, people who bought calls at the top going for 380, they got to double down and average down even more.
So many dojis. Uh, 3 minutes basically. Mm. 50.
We're at the 800 on the 5 on SPY.
Mm. Thank you. Sellers coming back in. Oh, never mind, that guy's got 8.
All right, we surpassed those sellers there, so we're going to come back to that previous first 5-minute candle and see if we can either meet those sellers that have limit orders up there, or
Ooh, buyers.
the buyers keep buying. Nope, looks like those limit orders are getting filled.
Roll, you in anything or you out?
What's the flow telling you? Are they doing above ask or at bid? Okay, so Bobby just slapping it aggressively. Oh, man. 2 minutes left on this candle.
That's a big doji.
What's your average down point, Royal?
Sheesh.
$37.65. Okay.
Ooh,
I have a level at 37.45 as well. Ooh.
oh.
I think it might be breaking. That's 37.45.
Boom.
There's the break.
We've cleared over those sellers that had the limit orders up there. Now we're pushing up to the next leg.
Oh.
What is the book map saying? I don't have mine's up.
37.40 buyers, weak sellers.
Yeah.
Sellers at 37.47.
That's what I
Oh,
thought.
37.50. That's a big seller.
We got 95% buyers, 8% sellers.
Also, book percentage is at, oh, wow, negative 12 right now. Plus 35. Plus 40.
On ES, there's about 65% buyers, 35% sellers.
Puke. Yeah, I may after this. I may
Buyers
wait.
got soaked.
Mm-hmm.
I may have to wait till after Powell.
Yeah, I'm waiting for the Powell talk too. That's
Yeah, I'm
what
gonna
moved it.
get out of this. Wait for
Too
Powell.
much up and down, up and down. I don't like that.
Yeah, it went from green to down 6% in 4 seconds.
can't get definitive scalp, so
Yes.
Golly.
fire. There's
This is
definitely
a
more
level.
green bubbles.
I apologize. Just started talking.
A lot of green bubbles right now.
Ooh. Where can I find this fucking thing? Where is it at? I'm trying to find it on YouTube.
I'm watching Fox Business.
Oh, you're on TV.
Well, on YouTube, their YouTube channel.
Pow. There it is. Fox Business.
I will review the current economic situation before turning to monetary policy.
I'm reading off a paper about inflation.
Energy categories for PCE prices rose.
If any of you took ABV, much for 147.26.
Held at that pace or eased slightly last month. Aggregate demand is
Slow
strong.
mover.
Constraints have been larger and longer lasting than anticipated, and price pressures have
Oh, we got
spread
back
to a
inside of
broad
the
range
magnetic
goods
line
and
on the
services.
regular trading hour.
The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and fuel, and it is creating additional upward pressure on inflation. And COVID-19 related lockdowns in China are likely to exacerbate ongoing supply chain disruptions. Over the past year, inflation also increased rapidly in many foreign economies, as discussed in a box in the June Monetary Policy Report. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong.
Oh, my 375 calls are up 10%.
Appears to be slowing, and activity in the housing sector
But
appears to be softening.
now we're coming back down.
Reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply.
Sorry, I'll put them back on.
Elevated. For the past 3 months, employment rose by an average of 108,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. A box in the June Monetary Policy Report discusses developments in employment and earnings across all major demographic groups. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January.
So are we just going to chop while he's talking?
The Fed's monetary policy
That's what it seems like.
guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation
Maybe
poses
not.
significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation.
Revlon
We're attentive to the risks that high
pumping
inflation
a little
poses to
bit.
both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting and will continue to do so. With inflation well above our longer run goal of 2%, and an extremely tight labor market, we raised the target range for the federal funds rate in each of our past 3 meetings, resulting in a 1.5% target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. In May, we announced plans for reducing the size of our balance sheet, and shortly thereafter began the process of significantly reducing our securities holdings. Financial conditions have been tightening since last fall and have now tightened significantly, reflecting both policy actions that we have already taken, as well as anticipated actions. Over coming months, we'll be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. We will make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store.
Ooh, that's not
We
good.
therefore will need to be nimble in responding to incoming data and the evolving outlook.
And it's
we'll
going up.
strive to avoid any
Yep.
uncertainty in what is
Okay.
already extraordinarily challenging.
I know that's weird, right?
We are highly attentive to inflation
Interesting.
risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Oh man, this is a
Thank you.
volatility
Look forward
candle.
to your questions. Thank you very much, Mr. Chairman. Let me, on behalf of Chairman Brown, recognize Senator Warren.
Thank you, Acting Chairman. I appreciate the help of the Chairman this morning.
Oh
And thank you
man,
for being
Elizabeth
with us.
Warren.
So Americans are struggling with rising costs, and all eyes turn to the Fed. Last week, you announced that the Fed would raise rates by 0.75 percentage point, biggest increase in
What
nearly
the
30
fuck?
years. So
Going
let's talk about what the Fed is and isn't doing when it
Powell
raises
pump.
interest rates to try to
Yeah,
bring
it's the
down
Powell pump,
inflation.
baby.
Let's start with gas price. Price of gas is up 40% since Russia invaded Ukraine.
turn green.
Chair Powell, will gas prices go down as a result of your interest rate increase?
I would not think so, no.
Okay. That
Can't
matters
put it
because
one
gas
And
prices
it's
are one of the single biggest drivers of inflation. Energy prices overall drove a third of the
Bro, these
inflation.
75 calls are
Fuels, as you
pretty.
say, have no impact.
You got them at
So let's
70
look at
cents. They're at
numbers.
$1.25. I'm trimming.
Price of
I
groceries.
should have bought long.
Americans feel the pinch no matter how much
I'm sitting on my hands, but
I got him at
Damn.
57 and I'm still holding one.
Oh, you little dean. I told you we're going to fill that gap from yesterday.
Okay. So a Fed increase won't bring down these prices.
37.60
Because
basically.
rate hikes won't make Vladimir Putin turn his tanks around in Ukraine. Rate hikes won't break up monopolies. Rate hikes won't straighten out the supply chain or speed up ships or stop a virus that is still causing lockdowns in some parts of the world. So let's talk about what interest rate increases can do. Chair Powell, you said last week that interest
My
rate
port's up 18%.
quote,
Nice.
demand. Can you just explain?
It is going on midnight here, guys. I'm going to bed.
We think about
Later.
Midnight. Alright.
He's in Australia.
Oh,
Sydney
okay. I was
right
like,
now.
what the?
Yeah, I've got one runner. I'm letting up. It just hit my stop loss, so I don't care. Yep.
Rates go up.
All right, done for the day, guys. Have a good one.
Later.
Higher interest rates will moderate or decline so that supply and demand can get into better balance. The second channel is just asset prices generally. Interest rates, as they go up, will cause asset prices to moderate across the economy, and people spend a little bit less out of their lower level of wealth. The third
I made my money on Revlon today, actually, which is kind of surprising.
and that just
Nice.
basically as the dollar strengthens.
So I pumped a little bit on the what's it called?
Rates go up, the dollar
Scanners, and I was like, let's just play it.
to drive.
So I appreciate this, and I do appreciate the explanation. But let me just see if I can just put a little more plain vanilla explanation of what's going on and what you said across the board is that when you raise interest rates, there's going to be less money to invest, and that is, it's going to dampen business investment. Is that a fair statement?
I think the idea is to
Makes it more
moderate
expensive
demand
to invest.
so that it can be in better balance with
Okay.
supply. In
So
the current
it's gonna make it
situation,
more-
demand is well in excess of supply in some areas of our
More expensive to invest, which in turn is going to throw workers out of work. And when they're out of work, they have less money to spend. So
Kind of make it work, or
stop companies from spending money to plans or to buy new trucks or to hire new people.
big bubble
Right, sure
three just
help
went
when money's more
missing.
expensive, they're less inclined to do that. I think that's what you just said on asset pricing, right?
Well, in the labor market, you have, as you know, you have a situation where there's a shortage of workers, and there are two job vacancies for every person who's actively looking for work. So part
There's
of this is
less
to get
money
the
to
labor
spend
market
because they're
back
spending
into
it all in
balance.
Congress.
I appreciate you call it back into balance. What I'm trying to get at, though, is what does the tool of raising rates do? And part of what you just said is that it increases, in effect, the cost to invest, to buy those trucks, plants, I'm so concerned about this, is rate increases make it more likely that companies will fire people and slash hours to shrink wage costs. Rate increases also make it more expensive for families to do things like borrow money for a house.
Why would they borrow money for a house? Bro, you need to get your money straight.
Cash only, baby.
It's like illness. And
Like-
medicine needs to be tailored to specific problems.
I don't.
Otherwise,
You average down at the top here?
main driver of price that can slow demand. President Biden is
Yeah.
working to increase energy supplies and straighten out supply chain kinks and break up monopolies and bring down prices. You could actually tip this economy into recession. So I just want to say, you know what's worse than high inflation and low unemployment? It's high inflation and a recession with millions of people out of work. And I hope you'll reconsider that
Oh, yes,
as you drive
míos.
this, before you drive this economy off. Thank you.
Damn, I didn't expect her to say that.
I anticipated that her saying that because, again, Democrats are more of a socialist, not socialist, but they're more of a, I don't know, I can't really say. How can I put it? When it comes to, like, I like some of the ideas Democrats suggest, but the reality is this, is that people were not smart with their stimulus. We've seen that all over media, that people were buying television, going on trips, doing all the things that they should have not done with their money, instead of them saying, okay, let me pay off any existing debt that I have with this, but I also understand that I have to pay my expenses and things of that nature. The reality is that no one wants to live below their means temporarily so they can get themselves out of their situation.
Yeah, they were buying. You know, Prada made their bags $12.50.
And people were still buying it.
Well, no, they're making it $12.50 on purpose so that people would buy it with their stimulus money, basically.
Yeah. So if these manufacturers, these high luxury brands are lowering their prices so they can get your money. It's a ploy. Like, bro, take a year, live below your means, work together with people, so you guys can say, okay, this is the plan. In 6 months, we're paying off this. Next 6 months, we're paying off this. Now you have more capital. Then you can start investing.
Yeah.
Then you can start buying real estate.
That's
Government
what I mean.
spending's the source of inflation.
Real estate's slowing down though, sadly.
Oh yeah, my buddy Ray, he's a real estate bankruptcy in Florida, and he's saying the dockets is just fucking filling up out the ass that people are filing bankruptcy on their properties.
Yep. Yeah, like I'm in Dallas.
Ooh.
And yeah, was it the cap rates on the commercials are like dropping? I mean, like going up,
Mm-hmm.
which is like you know, like typically you want to sell a lower one, like your terminal should be lower.
Mm-hmm.
Dude, it was like I just saw a really good triple net office building. I think my group's gonna buy it up though. It's like 8% cap rate. I was like, what the fuck?
Sheesh.
Yeah, triple net too.
Government spending's the cause of inflation.
Thank you, Senator. So, financial conditions, of course, have tightened and have priced in a string of additional rate increases, and that's appropriate.
Clark Kent grabbed some $700 Tesla puts.
Senator Gillis pointed out as well. Our policy rate is only at 1.6%, but
What a panda
all
graph.
out the curve, the market is pricing increases. So financial conditions already reflect.
Oh, still rush it down.
But we need to go ahead and have them, and I think that the most recent inflation of various kinds suggests to us that we need to accelerate.
It breaks under 45.
Pace at which we get up to a level that is neutral, that is close to the longer run neutral level, and then we can make an assessment of how much further and faster. So that's what we're doing. I think you can see from the move we're making now that we do understand the full scope of the problem, and we're using our tools to address it pretty vigorously now.
Mr. Chairman, explain to us again how important price stability is to all Americans.
So, price stability is really the bedrock of the economy in this sense, that you really cannot have a sustained period of maximum employment or other co-equal. You can't have that without price stability. And so we must restore price stability, and we will. We have the tools and the resolve and hopefully the judgment to accomplish that task. It's essential that we do.
What's your next step?
Well, if you look at the market has been I think reading our reaction function reasonably well, and I think what you will see is continued progress toward higher rates. I'll say this: the center of the committee wrote down that rates would be between 3 and 3.5% by the end of this year, as of a few weeks ago. This is 1 week ago.
Is this Federal Reserve governors under your leadership committed, as Dr. Volcker was some 40 years ago, to bringing inflation under control no matter what?
I would never want to try to compare myself to Paul Volcker in any way, but I will say that
that's
we're
good.
strongly committed to restoring price stability. We do understand that it is the thing that we need so that we can get back to the kind of labor market we all want.
But reaching the standard that Volcker left at the Fed would be a high reach, but one that anybody there should try to get there.
Yes.
Thank you.
Thank you, Senator Shelby. I'll cite my time now.
Mr. Chairman, point out in your testimony for personal consumption expenditures minus gas, food, 0.9%, even slightly declined from the previous one. So that leaves the real culprits, gas and rent. Inflation. And the other problem, it's a cartel that sets the prices.
Sorry, what's a cartel?
Oh, a cartel that's
yes, globally.
and making money. Appears with climate, we've seen, and we've seen. Sorry.
transportation issues with respect to
Think it might be going long
of course, the functional
soon.
lack of drivers. Again, Ukraine, significant wheat being exported as fertilizer. Rental, Senator and Congress recall Virginia and Washington House 59 stone. And that is, are those the major courses?
Those are some of the major ones. You could also point to some parts of the goods economy, which have been restrained capacity, and now you're actually seeing significant price increases in some of the service economy as it really reopens fully now, and that would be the travel and leisure sector.
There's another issue too. We talked about the cartels that dominate hydrocarbons, but we found, for example, during the pandemic, that there are really just four processes in the United States.
Yeah.
And with four, rather than multiple, that there is the ability to indirectly restrain supply and raise.
I'm going to leave this. I'm going to grab some coffee. Be right back.
Antitrust aspects of some of these pricing. Is that a plausible ingredient to the problem too?
So I think that's really a matter for the competition authorities, not for us. But sure, I think broadly speaking, our economy is very competitive. There will be some industries where that's less so the case.
So these range, you have to take action. Your basically tool is interest rates and going in and out of buying public securities. But we have a lot of work to do too, which is to try to resolve some of these issues. And we have to do it in order to assist your effort, fiscal policy and other policy. I was very pleased to see the president sign legislation with respect to shipping reform. That's a step, but we have to do much more too. Is that accurate?
I think that's really a question for you. We're very focused on sticking to our knitting and carrying out the tasks that we've been assigned.
No, I appreciate that, and the independence of the Fed is something that's protected and by everyone, including particularly yourself. A final sort of issue that I'm thinking of, we're at a tremendous, I think, turning point in our economy. Factors that 10, 15 years ago were not active, things like social media. One other factor with respect to hydrocarbons is perhaps the companies are consciously limiting investment because anticipating provide power supply, electric cars, Is that something that is looking at?
I think that is certainly, if you pick up the annual report of any of the big oil companies, you'll see that is something that is happening, and it's a rational economic response to expectations about where future policy is headed.
No, I think there are so many factors here, but I think it's good to get to the table. Thank you very much, Mr. Chairman. With that, let me record. Senator Tilton.
Thank you, Senator Reid. Again, Chair Powell, thank you for being here. By the Fed's own analysis of various policies, including the Taylor Rule, revised Taylor Rule, balanced approach rule, and the balanced approach shortfall rule, rates should have begun to rise long before they did. According to the Fed's own analysis of these rules, the Fed's fund rate should currently be above 6%. This is in a report to Congress. Yet the rate currently stands at 1.6%. Likewise, these same rules should have prompted the Fed to begin raising rates Q4 last year, Q1 this year. I'm concerned that the Fed has opted out of rules-based to discretionary monetary policy. As the Fed reviews monetary policy strategy, Chair Powell, will you commit to considering an increased weight for rules-based strategy in Fed decision-making, and if not, why?
So, we do use policy rules like the various forms of the Taylor Rule in all of the analysis that we do. If you're thinking about how monetary policy, the economy some sort of a rule like that. Fed's never really used them in a prominent way to actually set policy in real. But that's not to say they don't shed light, and we do consult them. We consult them on an ongoing basis. The rules called for deeply negative rates during the pandemic, and we didn't do that. They did call, of course, for rates to move up, and rates now really are much closer to where the Taylor rule, various forms of the Taylor rule are, and I think by the end of the year we'll be pretty close to where some of the Taylor rule iterations are. So it's something that we consider. I think in a couple of years when we look at our framework again, that's something we could look at.
And Chair Powell, could you just briefly explain the variance between rules-based decision-making being at 6 and where we are today? What other factors came into play?
So what Taylor rules don't take into consideration changes in financial conditions. They just look at the overnight policy rate. As I mentioned earlier, we began signaling, the way we're set up now to signal policy changes going forward. Summary of economic projections that we 4 times a year. So markets priced that in, and you're getting a lot of policy tightening well in advance of actually raising rates. As you pointed out, we're at 1.6% only on the federal funds rate. But look out the rate curve. All the very substantial additional rate hikes are already priced in, and conditions have been for several months. So that's one way of thinking about it. Really, only at the very short end, where rates are still in negative territory, real perspective. If you look farther out, real rates are positive right across the curve, and that's really what you're trying to achieve with policy in a situation like this, where we have 4 rise in inflation, and we know we need to have restrictive policy.
Oh man, we're in the channel. We're pushing.
2012,
That's a
Fed
push.
current 2% inflation target. Then amended this in 2020 to allow inflation to run over 2%.
Is it up to 70?
So that inflation
Or back
averages.
to where we had yesterday, basically.
Yeah.
Many warned this approach would simply give inflation.
I have 375.08 as virgin point of control. We're at the point of control on ES at 3768. We're just underneath it, slightly under the daily open, the session as well.
No, that wasn't the way the framework worked. And I should clarify, though, the framework was carefully focused on what we knew, which was the economy of the last 25 years. The pandemic hit a few months afterward, and I think we've been there since reasonably quickly after that the disinflationary forces of the last quarter century had been replaced, at least temporarily, by a whole different set of forces. And those are the forces that our policy has been reacting and dealing with, and we were well aware of that. I think that what we were looking at was a world in which you didn't see inflation move up even for an extended period well below 1%.
I think this might be a long trade right here as well.
How long will this new set of forces be sustained? We can't know that, but in the meantime, our job is to find price stability in this new economy.
And final question is, there is some renewed discussions about increased spending and increased tax reconciliation. Just hypothetically, if Congress were to pass a bill that increased spending by $500 billion or $1 trillion, raise taxes, would that make your job easier or more?
I swore off getting involved in these fiscal debates a year or so ago, and I'm determined to see if I can't stick to that. But remember, we can always incorporate, and what we do is we take fiscal policy as given and we react appropriately.
Well, then maybe instead of policy working through Congress, but policy that was passed by Congress, believe that the $1.9 trillion spending package last year had any inflation.
Yeah.
I'd really, it's really not our job
Popping tail.
I would say yeah.
We didn't pass judgment on the Tax Cuts and Jobs Act or the CARES
What
Act.
do you think the top this pump goes to? Do you think it continues?
I don't think it's going to continue, actually.
Do what?
It probably won't continue because it's topping.
Yeah.
And the volume is low.
I mean, just watch yesterday's highs.
Yeah, I just gotta figure out where to short.
Let me start with high prices.
It's gotta be around here.
Not only in Nevada, but across the country.
Yeah, this might be
That's
housing and gas
close.
prices,
This is a
which
4-hour supply.
really is creating
Do what?
financial
This is a
hardship.
4-hour supply from yesterday.
Right here.
Let's start with
But
gas prices first. In Nevada,
yeah, from
average price of gas is
3767 to
$5.60.
3783.
Now, say it's about $5.60
But
in Reno and
politics
$6
is market, so it don't
a
matter.
gallon. And as gas prices
I'm
rise
sure,
across the
personally.
country, oil and gas companies are making record profits, but are using that money to continue to consolidate their industry and pay for stock buybacks instead of investing in
And it's
increased
pumping
oil
still.
production. On one of the
I want 3780.
9,000 rigs that they have that are unused.
Is that Tom? Yeah, it's Tavio. All right, I'll go 3782.
Yeah, 3780 seems like a safe short entry.
I am still in these 375 calls for 0 days, 76 cents to $1.73.
Hold that shit.
When considering the drivers of how much
Yes. Okay. Okay.
economists consider consolidating.
Can I start?
Here's the level at 75.
Hold on. Actually, let me see what put I would play.
Rising prices.
If you are going to play puts, grab 370 puts.
For today?
You're going to grab puts, grab 370 puts for Friday.
Oh, it's pumping.
Oh, this shit is going.
You still like 3780, Tavio?
But I have to push back. You have to
Yeah.
consider that. I mean, you're
Yeah. That yesterday's high, so like I'll take a short.
Yeah. All right. I'm gonna get mine ready. You in a full position?
Yeah, I'm definitely gonna get a full position at that level.
Ooh.
A full position. Okay.
But if it starts like pushing, yeah, I'll probably cut.
Yeah.
Get like a 5-point stop probably.
Yeah.
Can I get these to $2? Let's go. I'm only.
Are you riding a stop or just watching?
No. I've gotten into my 375 calls at the bottom.
I know, but I mean, do you ride a stop or you just watch it?
I just watch it. I don't have a stop.
Yeah.
Not many pivots. It's kind of crazy.
Talked about an outside agency. This is why this is
I don't like that contract.
And the reason why I was going for calls at open is just because we opened up below the magnetic channel. And when we're below the magnetic channel, we have to push ourselves back within the magnetic channel. So on regular trading hours, this is why it's important to have extended hours on one chart and regular trading hours on the other with the magnetic lines within the with the yeah.
I'm
with
getting
the you're getting out?
Yes.
Yeah, it's pushing.
No, this bitch is moving dumb. Wait, did it break resistance? I think it did.
Well, Tavio, I thought you were 3780.
No. I'm talking about calls. Oh, I missed entry for calls.
Oh, okay.
All right.
We're about there.
All right, I'm out of my SPY calls for $200.
Please don't pull back. Please don't pull back.
We take that as given. So if you pay attention to what
For a little bit of push here, and so you can enter short.
But again, like I was saying, since if you have regular trading hours and extended hours, regular trading hours and extended, you're going to see two different types of price action. So we can actually push up to the highs of 378 today, which puts us slightly under 380, and then we can roll over. So if we roll over at 80 psychological level, you can grab the 375 puts.
I really do think we'll see 380.
The best thing you can probably do is look at oil futures because that
Today.
futures in theory should be taking
That was a
into account
10-point candle, so.
all of these factors, and that's what we do. But
I have my GP level up here.
Oh my God, I get to it.
we don't have tools.
That, my friends, is how you turn $76 into $200.
Not really. Of course, we understand them.
Did you get filled, Tavio?
Nah, I'm waiting for that shit.
You what?
I'm waiting for that 3780.
Yeah, we were right there. I wasn't sure if you put one in and got.
No, we hit it.
Those are not judgment for us.
No, I don't think we hit it.
Oh, I was gonna say, I just
barely under.
Facebook.
3778.
Ooh, wow, we're really close.
Is something you've got to take into consideration. Yes. Unless they change, the prices are not coming down. Unless they stop giving profits and sharing that with their shareholders and start addressing
Do I ever have to test Facebook for a $6 loss?
These prices are not going to come down. I would assume.
Okay, here's my philosophy. I'm an investor. I'm investing my hard-earned money into companies. I expect a return on my investment, right? So why should a company be worried about the consumer? The company's job is to get the consumer to then buy that said product through marketing and persuasion, as you want to call it. So why is the government drilling Powell about businesses who are not looking at the consumer but only focusing on the investors? Right?
Yeah.
So if I'm an investor, I want the company to focus on the investor because I can easily at any moment say I want my money. Right?
Yep.
Am I wrong?
No, you're right.
I don't think it's appropriate for the Fed or for me to reaching out into areas of policy that are not assigned to us. It's not up to us to comment on
78.
On that sort of thing. We have a very
Right, I
specific
got it.
79.
precious independence to carry that job out, and I think the other
80.
side of that stick to that job.
I wouldn't go just yet, guys.
Yeah, I don't think so either.
Crazy.
Cortez, nice little 7 rounds from South Dakota's wrecking.
This candle's too new, I think.
Thank you, Mr. Chairman.
Yeah.
Way too new.
Welcome again. It seems as though for the last couple of
I think it might be 82 before we can get down.
Yikes.
has been a primary item of discussion. I want to follow up just as my colleagues have it. I'd like to take it a little bit more.
My buddy was like, J Powell's a puppet. I said, J Powell needs his calls to print. They've been averaging down on their positions. They need this market to pump.
The reality is that a large portion of the inflation stems from the higher energy prices, which is part of the supply side.
82. Oh, wow. Right over it. Okay.
January of 2021 through January of 2022, the price of unleaded gas.
Oh, that's a big pump.
During that time period.
We are just taking off right now.
This is silly.
There's so many, so much limit orders on both sides right here.
Yeah, I just put
a clean GP break and a high of yesterday too.
Policy decisions made by
Let's see if I get filled.
We need a hold up here now. This
I'm trying to get filled at $5. At 370, 37.50 puts.
An increase in U.S. dependence on foreign energy
Here's the
sources
85. I don't think it's gonna come down yet.
To send a terrible message to the market about
Oh, this is ridiculous.
of investing in oil.
87?
Come on now. Didn't I say I can snipe this shit all day?
At the same time, Mr. Chairman,
Okay, I'm 15 points away from getting filled. And of course, Meta is doing dumb shit. Yeah, let me just put us over there, break even.
Here's the drop. A little bit.
You're lying. Did I get filled? And I didn't fucking get filled. What the fuck? I was 15 away.
God, what an average down. I had room.
I mean, there's still a lot of aggressive buyers here, so I would be careful if you're shorting.
Certain aspects of inflation, and that would include
IQ 11.7
and food inflation. So, nonetheless, our statutory goal is headline inflation, but we also know that core inflation is actually a better indicator of headline inflation than headline inflation.
Can't believe that.
Food and energy tend to be quite volatile. They tend to move up and down, and that's been the history. So, core enables us to look through that volatility. And so we focus very much on that as a better representation of what underlying
5-day, 88.
And I think
Looking at the book map, we got a wall of sellers at 3802, baby.
I only got filled for one contract.
You guys should be waiting until ES gets up to about 3,800 to fill.
Yeah, I think 3,800 is probably where it's going to come down.
Yeah, you got sell orders at 3,800. You got sell orders at 3,802 that are going to push it.
a lot of buy orders right here too at 80s. Kind of crazy.
South Dakotans are seeing like the rest of the country. What I believe is going to happen here, and I just share this.
So I should just leave this one contract.
Are aware that you're going to be the person that takes the fall if inflation is not brought under control. And this administration is going to point to you and to the Federal Reserve saying you have the tools to fix inflation and you're not doing your job. When in essence, a portion of inflation which Americans are feeling today may not just be the core inflation that some of your tools do, but the total cost of inflation.
Fabio, you watching this on the 15 minute?
South Dakota feel to the tune of
What, the 15-minute? Yeah.
$682 more per month in expenses than what they were when this administration took office.
This looks crazy on the 15 minute.
Absolutely insane. I never catch a play like that.
What happened?
The 15-minute actually looks insane. Well, I got out of meta for it.
Just very briefly.
You got out?
No, I'm out of meta.
Oh yeah, take green.
Yeah, like that.
Substantive technical changes to the calculation of the GSIP score for EU-based global.
Why are we moving so slow now?
I have another level here at 377.53. We should slow down at 377.53 to 377.68.
I still have this one contract.
Apparently, it looks like this may very well provide some advantages to our European banks.
I'm about to get stopped out.
Assessment of how they view risk.
Can they really give us 20 more points? That would be insane.
Yeah, look at, I posted a chart in the open chat in the boiler room. The 15-minute looks super volatile. There's a lot of volatility. I would say wait until you get to 37.99, 38.02. That's another area where you can probably see a rejection.
Thank you, Mr. Chairman. Thank you, Senator Rounds. Senator Warner from Virginia is recognized. Thank you, Mr. Chairman. Chairman Powell, it's good to see you again. Thank you for your service to our country. I want to go a couple of directions. First, and I think some colleagues have already raised this, but the truth is what we're grappling with right now on inflation is clearly a global phenomenon. Cato Institute group that doesn't always necessarily agree with folks on my side of the aisle have pointed out that inflation in many industrial countries around running the same rates, if not higher. Frankly, just returned bipartisan trip, Finland, Latvia, and Turkey, being back late last night, still a little bit jet lagged. And Turkey, I think inflation's running at 78% a year. Finland, gas prices
crazy.
$9 a gallon. And I asked one of your Republican colleagues, it's amazing, Joe Biden's inflation hitting here in Finland too. Point being that a lot of these effects are not due to any single country's activities, but globally. Colleagues have already acknowledged the effect that Russia-Ukraine has, some of the disruption on supply chains. What I don't think has been fully addressed yet is some of the challenges that are coming around from China in terms of their zero COVID lockdown on Shanghai for literally months on end, and how that supply chain disruption is floating through the whole global economy. Can you speak to that, Mr. Chairman?
Sure. So, of course, you're right. Inflation is very much a global phenomenon. Advanced economy like ours, you'll see inflation quite similar to ours.
We're just underneath that magnetic line of the purple one with the extended hours on, but we are hitting the +2 magnetic line. What is that?
In terms of your
+2? We're just underneath it. So I think we're overextended here on SPY. We may see it consolidate for a little bit.
So we'll expect to be seeing some negative effects on bottlenecks. On the other hand, China now seems to be coming out of that period.
Contract is up $70.
Growth seems to be picking up, and the advanced indicators are their economy may be
We're way over RSI right now.
COVID policy.
Yep.
As long as it's in place, it certainly could. You could certainly have a relapse, given this highly contagious.
And again, we're all looking on short-term items.
And Pal saved my account today. Thank you, pal.
President visiting Saudi Arabia.
$76 per contract to $250. That is how you're supposed to trade. You only should be trading for one. We had a catalyst, powwow. He did his job.
$91, $92, almost.
Easy to take away tax, tough to. There's always an excuse not to, but seeing better analysis. I do want to raise and recognizing that not everything can be done. A switch piece of legislation that basis pass the House.
If we break over 3802, right, the next area of liquidity is going to be at 30. There's a sell orders up there, but.
And right now we see, particularly around auto inflation, big drivers. Lack of chip supply, so cars can't actually be sold. They're sitting warehouse waiting for the semiconductor. This legislation, $52 billion.
I'm not gonna. I don't think I'm gonna play some more trades today.
I don't need to take any more trades. I don't need to take any more trades. I'm done.
Yeah, I mean I'm in profit, but
same here.
Yeah.
Tesla was at 685 and is damn near 750.
Yeah, that's insane.
So in the last 2 seconds,
Dude, we're still going. We're gonna hit my level syrup, but we're right there. 790? Damn. 377.6 here.
Again, I wouldn't, as you say, I wouldn't comment on a specific.
I feel like it's gonna keep pumping.
Yeah.
Momentum's too strong.
Oh man, I wish I would have left for 375 for now at $3.
Oh, imagine you left the runner.
But I'm fine taking $76 to $250 per contract.
Thanks, Senator Kennedy.
Oh my God.
Chairman,
The Louisiana governor.
Is just an imbalance of supply and demand. Agree on that?
Yes, definitely.
And to put a little finer point on it, our inflation at this time, and this is the case with respect to most cases of inflation, demand is greater than supply, so prices go up.
In some parts of the economy, yes.
Right. Now, fine. So we've got a situation where demand's up here, supply's down here. You're trying to lower demand. Is that correct?
Yes, while also giving the supply side time to recover.
It sounds like the Johnny Depp Amber Heard trials a little bit.
You're talking about control efficient, and you're trying to lower demand.
Well, I would say lower demand growth. We don't know that the demand has to actually go down, which would be a recession.
I think it's going up, but just swallowed up another red bubble.
is driven by consumer demand. And you're trying to lower demand and slow the economy down. Am I correct?
I guess I just say we're slowing down growth.
Right. That's what the economy is. Growth.
Yeah.
Okay? All right? There's another way. The two aren't exclusive. You alluded to that. You can also lower demand, but you can increase supply. Can you not?
Yes.
And that would solve inflation.
Yes, it would.
Now, Congress's job is not to deal with demand per se. A lot of the bills we pass impact demand, but that's the Fed's job. Okay? Now, I'm not going to ask you to comment on any specific bill, but tell me the things that Congress could do right now while you're lowering demand, not you literal, Federal Reserve, what we can do right now to increase supply.
I think you went to the gym? I think
Yeah.
the things you can do are important over the
You're
medium and
silly.
longer term, but probably not so much in the short term. But it's things that like investing in people so that they can remain in the labor market longer, things like that, and
About time.
infrastructure, things that will increase the productive capacity.
Well, how about, well, a long run, as Keynes said, we're all dead. I'm interested right now in the run.
Wow.
What about if we reduce the regulatory burden, let's say on refineries, wouldn't that incent refineries to start refining more and help on the supply side?
I would say anything that could increase capacity on that front could have.
Yeah, but would that help? I'm not trying to get you to endorse legislation. Look, Mr. Chairman, we got a hell of a mess here. Okay, we my people so hard they're coughing up bones.
Oh boy.
I don't care what the inflation is in other parts of the country, of the world. I'm sorry they're having inflation in other parts of the world, but and misery doesn't make my people feel better. They're still miserable. Inflation is hitting people so hard they're coughing up bones. It's the highest in 40 years. Our national debt is greater than our national output. Crime's up, the border's open, respect for institutions is way down, and 70% of the American people think we're headed in the wrong direction. Now, we got a hell of a mess. And right now, you're the most powerful man in the United States, maybe in the world. We've got to get, President Biden, I don't blame him. I understand politics. He keeps saying, well, your 401k has crashed and gas has gone from $2 to $5 a gallon because the economy's so good. And the American people know that's not true. Now, other than relieving regulatory burden, I put a question.
He's a governor in Louisiana.
Congress said, look, we got a budget. We're going to freeze spending. We're going to stop injecting more money into the economy. We're going to freeze spending until Powell can get control on the demand side. Would that help?
He's giving to a Powell straight.
Giving you advice on what to do when
I'm asking
we're
for
not
it.
getting
I welcome it.
we're not getting our own job done. I feel like maybe a better thing to do would be for us to get our house in order and do the job you've assigned us.
Well, let me put it another way. Let's suppose, forget about Congress. Let's suppose that every governor in every state and every legislature in every state got together tomorrow and said, I know it's not likely to happen, and said, we are going to freeze our budgets. We're not going to spend a penny more than's already budgeted. Would that help?
Would it help?
Sir?
Would it help with?
Would it help reduce inflation?
Powell wants to say yes.
It might, but it would take.
Direct answer.
Again, I'm giving you. I'm scoring fiscal policy.
Well, I understand
really
the
reluctant.
intent. Chairman, the United States Congress, in addition to its regular budget, has spent $7 trillion. I'm not saying that all of it was unnecessary.
Why are you taking what I just
On
said?
top of that,
I'm not.
the Fed's increased its balance from $1.5 trillion to $9 trillion. $9
No.
trillion. I know you're cutting it back.
That was
But we
interesting.
injected all of this money into the economy, and then people go, well, we have inflation. Duh. Give me some help here. Tell me what we can do.
I'm really focused on what we can do, which is shrink our balance sheet and raise interest rates and supply and demand back alignment and get inflation back down to 2%.
Thank you, sir.
I want to thank the chair and ranking member. I also want to thank you for being here, Mr. Chairman. I appreciate it. I've just got to say one, Senator Kennedy. I think freezing spending is probably not a good idea. Except we just had a flood that cost $1 billion damage in southern. $1 billion. We freeze spending, that infrastructure never gets rebuilt. So I hear what you're saying, and in some aspects I agree, but it's a lot easier to talk about than it is to do. And I think that's the challenge that the chairman of the Fed has, is that It really needs to focus on what he needs to do. It's a simple solution. We'd already had it done. I'm concerned about relations having a
Montana governor.
I've seen it transpire in the last several years, particularly as this country's come out of this pandemic. And I know we've had a conversation that it's two-edged, it's supply and it's demand, dealing with the demand part, which is an important. And in some respects, Senator Kenny's right.
We'll call it. I don't think it's happening.
World to be able to deal with some of this stuff. But from a rural perspective, is the Fed doing anything in particular that I can take back to my constituents and say this is what it's doing right in addition?
Well, so we are, of course, well aware. As you know, we have 5 Reserve Bank presidents who have very large cultural economies within their districts, and we hear, excellent reports from them about what's going on. And it's clearly a tremendously challenging situation. Fertilizer prices and all kinds
Nobody
of
got puts near 3,800 today.
Can't get parts for your equipment and that kind of thing. So, overall, we do appreciate that. You're not seeing this yet, but if times do get difficult, then we work carefully with borrowers in the Farm Belt and that kind of thing because we know, that's what you do. We're not at that times at this point, but that's one thing we have done in the past. I mean,
see if every dip keeps getting bought.
We think we need to get back to price stability, and that will help. That will help everybody with the economy.
What?
Interest rates. I know they've been
put a policy out and request that all these major,
I'm not going to ask you.
This is just like Nike or all these producing the products in other countries. They need to bring them back into
some of the.
But that means that they would then have to cost of all the goods. The reason why they have their manufacturers over there is because China offers a cheaper labor cost than what we charge for in the United States. We have this a thing where, we exploit other countries whose means of living is a lot cheaper versus our means of living in the States. So you can bring a Nike factory here, but I guarantee you they're not going to work at the wages that they are in China.
That's fine. We still, like he said, our debt is more than our input.
Yeah, I know. We spend more than what we're taking in.
Spend more than what we're taking in. One, because we export a lot of stuff.
Mm-hmm.
But they need to bring some of that business back here.
Look at it as this. The reason why a lot of small businesses have to charge a higher price is because the cost is they don't have access to those manufacturers that bigger corporations have where they've worked together deals. So when you shop locally, yes, you're helping a local company, but you're paying a higher ticket price.
What does America export?
What do they export?
Over and over again, and we said we'd move more aggressively if it was appropriate. We thought it was appropriate, and we.
So what? And so you said you want to get things more to a neutral level, and are we to a neutral level now?
No, so we estimate the longer run neutral level around 2%. And actually, we think it will be appropriate to raise rates above a neutral level to a modestly restrictive level because
so
very high inflation.
The United States top 10 export is mineral fuels, oil, machinery, computers, electricity, electrical machinery, vehicles, medical, aircrafts, precious metals, pharmaceuticals, plastics, and organic chemicals. Huh?
Do you agree with the perspective?
That's what we
interest rates go too high.
That's what we export.
Yeah, but import is what comes in.
It's not our intended outcome at all, but.
So we import cars, crude oil, computers, phone, smartphones.
Have made it more difficult for us to achieve what we want, which is 2%.
Those are the top 4. Let me see what the top 10 are.
Thank you, Mr. Chair. Senator Haggerty of Tennessee is recognized.
Thank you, Chairman Brown. Chairman Powell, one of the many downsides of quantitative easing is the fact that
Break 3783. Come on.
Ugh. Powell said recession, and we drop. And I missed. Where'd you buy? Oh, okay. Yeah, I had my order at $2, moved it to $1.98. Of course, it hit $2, and that was 15% ago. I guess I'll move mine up.
in the next 18 months. Meanwhile, per its most recent Fed month is to
I was talking to you, so I don't know who's.
challenge potentially exacerbate the rest of the historic relations.
I'm looking at 374 puts here.
Yeah, there is old.
As we look to the fall, how
I was gonna use it, but it was
balancing this
hard.
potential tension between the Fed's two mandates, particularly
What are you looking for, Professor?
We hit a just underneath that 37.99. So I want to see us either consolidate at a retest of 37.97. If we reject it, we're coming down back to the daily open at 37.76.
factor of 2 to 1.
Ugh.
Yeah. I'm Tom Tillis. I hate women. Vote for me.
And you wind up getting high inflation. So if you just kind of wage increases would be percent. Today's wage increases, if you look at significantly above. Now there's some evidence that
Are you guys looking at 375 puts?
So it's really not about reducing wages. It's just
They're flatlining price right now, so.
And what would you expect if wages started to stabilize, as you say, they stop increases? How long would you expect it before the prices that consumers are paying would start to go down?
So
are they ever going to go down?
It depends. In prices don't have to go down for inflation to go down. So
right.
Prices remain at the same level and inflation goes to zero. But it depends on different businesses. In some parts of the service economy, labor costs are a very large portion of costs, and so you would think that gets passed through very quickly into prices.
Is that paying before you
sign? So we would think we would think that pass through should be shown fairly quickly in some parts of the economy. In others less so, but over time, we would want wages to be moving up at the highest sustainable rate that's possible,
highs.
And consistent with 2% inflation.
And of course, at the same time, the economy, we've got this very, very strong labor market, but simultaneously we
what was yesterday's high?
Higher unemployment among African Americans, for example, nearly double the
yeah, we
of white Americans. So, how do you see this sort of interplay between wage growth and what the Fed actions that underlying issue?
So we don't target wage growth, of course. Our job is price stability.
Right.
We look at wage growth because over a long period of time, it's an important factor in determining price stability. So that's really how we think about it. In terms of the disparities, we saw those disparities increase significantly at the beginning of the pandemic and then reverse, as we pointed out in our monetary policy report. Those gaps have at least returned to historically lower levels. There's still gaps though, and those are not really gaps that we can get at with monetary policy. But we point them out because they're an important aspect of our economy, and we do consider them as we think about appropriate policy.
I think I would agree with you. I think that those are sort of systemic challenges that are addressed through the policy that we work on here. It seems to me that I think we have a labor supply problem in the country, and we should be dealing with that in Congress and to make sure that people have the skills and the capacity to do the jobs that our economy is creating. But it also seems lagging inflation somewhat. You're not keeping up with inflation. So I think it's just a complicated issue.
No argument there.
Yeah. Well, I just have a couple of minutes. that what we're seeing around the country everywhere, and especially in Minnesota, about extraordinarily high housing. The Fed is raising interest rates, which is going to have an impact on increasing house prices, mortgage prices go up, and in terms of building housing, it's going to go. So I'm just am interested in how you sort of weigh that dilemma.
So, after the pandemic, for a number of reasons, housing demand went way up. Rates were low, but also people decided they wanted housing, single-family homes rather than town. And so prices went up all over the country at very, very high levels. Now you see the housing market slowing down because you see higher rates are having an effect. That should have an effect on housing prices, perhaps even fairly quickly, so that prices won't necessarily come down, but price increases will flatten out. We're seeing lower home sales, we're seeing lower starts, so we're seeing a slowing in housing. And, ideally we would, the very low settings of rates during the pandemic were appropriate, but part of what that did was it supported a lot of demand for housing. Maybe we're going to get back to a place where supply and demand are closer. I will say, I agree with you on the labor shortage issue, which is a longer term issue that we have, but also with housing, there are constraints on housing construction, so that it's very possible that we'll be in a position where there isn't enough appropriate housing at the right price, and that's a longer run issue. Again, not so much for.
Thank you.
Thanks, Senator Lummis of Wyoming.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being with us today. It'll come as no surprise to you that I want to focus on digital assets, Fed master account. So my first question: treatment of digital assets, specifically SEC Staff Accounting Bulletin 121. So this bulletin requires publicly traded companies, including banks, to hold digital assets in custody as an on-balance sheet liability. So will the accounting standards contained in this bulletin that requires it to be on balance sheet be applied by the Federal Reserve to banks and bank?
All right, so for anyone that's curious about my thesis on puts, this is what I'm noticing, is that volume is starting to slow down here in comparison to the last, let's see,
certainly something we're focusing on
30 minutes. They're trying to do one more push up. I want to see if ES can retest 3796.75. If it cannot break above that and go into that 3800 psychological level, then I'll grab the puts. But I'm just waiting right now, guys. I'm not going to rush it because it is. So I would rather have them chopping away and then pull it back down to that 375, which would be yesterday's close.
Standards of the SEC staff bulletin,
So don't rush it. Just patiently wait.
That would be the first.
Be right back, guys.
There we go. Anybody here? Oh yeah, I'm shorting big time.
I can't even go and make breakfast, and this shit already tanks.
Approve on that system with the current proposal.
Oh my fucking gosh.
Or considering comments on that, as I'm sure you.
Oh my gosh.
You also know applicant master accounts are getting thawed between general and the one says that Federal Reserve says the banks have all of the authority, meaning Federal Reserve Bank of Kansas and others have all of the authority they need to make these decisions. And yet you go to the reserve banks and they, oh no, we're waiting for the Board of Governors. So there's a whipsaw effect and we get no answer. The black hole continues to exist. And, my frustration level has long since been at a boiling point.
Oh my gosh.
No response to this. It's a black hole.
Can never make.
And I wish to just once again use this opportunity to encourage you to address that. There's just no excuse. There's no excuse, Mr. Chairman. Thank you.
Senator Lummis, Senator Van Hollen of Maryland is recognized.
Thank you, Mr. Chairman. Welcome, Chairman Powell. I can't let an opportunity go by without raising the issue of FedNow real-time payments system implementation. You would agree that if we can get the system in place, it will save billions of
Let's get one more push back up.
dollars, would you not? Yes, I would. And so that's why I just want to encourage you to move very quickly. As you know, the system is scheduled to go up next year. We had an earlier hearing
not make that much money
in this committee. And,
No, they're not.
Brookings Senior spent a lot of time monitoring this system, shared his concern that we weren't moving fast enough to hit that date and fully implement it. So I just want your commitment, Mr. Chairman, that you are focused on this and that it is a priority. Very much so. We're very focused on doing it right and also on time. And that's next year, right? Because it especially impacts paycheck to paycheck, right? Who make a deposit in the bank, but it doesn't clear. And then they get tagged with all sorts of charge fees and things like that. So I just, other countries that are a lot less advanced in terms of technology in the United States have figured this out. We should be there now. I just want to turn to really the issue today, which is this challenge in navigating between keeping a strong economy moving and low unemployment and dealing with price. On the good news front, and I think you've testified to this earlier, the United States is doing a lot better than our sort of near peer economies when it comes to economic growth and quickly reducing our unemployment rate. Isn't that the case?
Yes, generally we're further advanced in our recovery, I would say.
Yeah. So that's good news, and we want to keep that going. We also obviously want to deal with price increases, and the concern which has been shared is that many of the causes of those price increases are beyond the control of the. And I call them the 3 Ps: Putin's war, pandemic supply chain disruptions, price gouging. Senator Cortez Masto raised that. And so I think the challenge is how do you navigate increases in interest rates when a lot of the drivers of price increases are beyond your control. And I want to raise a specific kind of case study here, which is in the housing market. Because you would agree, would you not, that increasing the supply of housing can help reduce housing prices, right? Sure. Yeah. But what we're seeing now is that with rising interest rates, investments are more expensive. We've seen housing starts fall by 14% in May. So that means fewer housing opportunities, less supply, fewer workers engaged in building new homes. So if you could just use that as a case study of how you're going to navigate these crosscurrents.
So interest-sensitive spending is a very important aspect of how our tools work. And in the case of the housing market, what you're seeing is higher mortgage rates. So you're actually seeing demand.
I can't listen to them anymore.
I can't either.
Indicators suggest fewer people are visiting homes.
He's saying the same exact shit.
Increasing, housing sales are moving down, housing starts are moving down, and overall, it's a slowing in the housing market. And I think what you will see, or many forecasts call for the increase in housing prices to slow pretty significantly now. You've seen very, very large, as you know, increases in housing prices over really since the beginning of the pandemic, and to the point where, all over the country you have housing, people, 5 bids above the ask the second the house comes on the market. Well, that's cooling off now to a more sustainable pace. So what we hope is we can get demand, that part of the economy, to slow to a more sustainable pace, and get the housing market back on a more sustainable path where there's a better balance between supply and demand.
I appreciate that. I'm just going to use my remaining time to sort of push you a little further on this issue, but not specifically with housing. But given the fact that so many of the factors, price increases, are beyond our control, and you talked about core inflation, what is your confidence level that we will have what is generally referred to as a soft landing, where we won't overcorrect in raising our interest rates to the point that it begins to really hurt our economy, workers, and wages? What is your level of confidence that you can navigate a soft landing for the economy?
It is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months, thinking there are war and commodities prices and further problems with supply chains. And the question whether we're able to accomplish that is going to depend to some extent on factors that we don't.
Well, Mr. Chairman, if I could, but this is the point I think many of us are making. The factors that are out of your control are not going to be susceptible to those costs being brought down: oil, gas, I heard you earlier, food, by the measures you're taking. And the risk is that the measures you're taking will slow down other parts of the economy without getting us the benefit of low prices. So I think that is a big theme today, and I just look forward to continuing our conversation about how you're going to thread that needle.
Can I say that the other risk, though, is that we would not manage to restore price stability, and that we would allow this high inflation to get entrenched in our economy. And we know from history that will hurt people we'd like to help, the people in our income spectrum, who suffer now from high inflation. That will hurt them more than anyone. So we can't fail on that task. We have to get back to 2% inflation so that we can have the that we really want.
I appreciate that, Mr. Chairman, but as you know, the prices that people are experiencing most vividly day to day is the price of gas at the pump and the price of food at the grocery store, both of which are things that you've said are beyond your control. So thank you, Mr. Chairman.
Senator Daines.
Chairman, thank you. It's good to see that here today. Like my colleagues, I continue to be concerned. Inflation, we're seeing the economy in its real life.
Shoot game. Sweet.
Montana families. When I go back home, I hear the top 3 concerns from Montana: inflation, inflation, inflation. Price of gas, price of groceries. CPI inflation grew 6% year over year in May, the highest increase since December of 1981. In Montana, the mountain states, where inflation grew by 9.4% versus a year earlier. This rate of inflation is unsustainable for Montanans and Americans alike. For months, Republicans in Congress and even some Democrats, like former Treasury Secretary Larry Summers, warned of the massive inflationary risk. $2 trillion March of 2021 stimulus package would then pose the economy. In fact, just pulled up the Washington Post article from March 29th, 2021, being in the very room, similar hearings, warning our colleagues about the risks of moving through a $2 trillion spending package. We had $1 trillion unspent COVID money still remaining in December
prior year. Let me quote from that Washington Post article. It says, Summers, or Secretary Treasurer Clinton, economic advisor to Barack, Democrat, Summers, age 66, who drafted for the past two Democratic presidents and was a top candidate to lead the Federal Reserve president, has emerged in recent weeks as the loudest critic of President Biden's approach to reviving the pandemic economy. The Harvard University professor advised Biden for a time last summer, warns, and this is key, that the president's stimulus plan may trigger the highest inflation in the century and could cost Democrats the chance to make lasting investments in the economy. There were many of us warning the administration and our colleagues finally purely partisan basis to jam through that $2 trillion package and the inflationary risk associated with it. Now, with inflation at a 40-year, these same Democrats are continuing to revise President Biden's sweeping Build Back Broke package, no matter the warning signs that are flashing right now. Chairman Powell, Mr. Summers has suggested several years greater than 5% unemployment might be necessary.
Yeah, we're kind of flagging. I want to see us flag up to the retest
Mm-hmm.
I don't want to comment on
of yesterday's high at 37.83.
generally, but
I
That's
agree.
where we kind of just broke down.
It's going to depend to a significant extent. Factors like how long does it take supply chains.
Oh, we are starting to make an inverted head and shoulders. So, man.
A lot of uncertainty around that. I would have a lot of humility about trying, predict with any clarity exactly where the economy will be in, the next 3 years, for example. But my assessment that there's certainly paths to get inflation to 2%. With outcomes that are substantially less, troubling than what you just read. You've characterized a soft landing getting back to 2% inflation while keeping the labor market strong. What's your confidence that the Fed can achieve this goal without causing a recession? I think that is our goal. That's our intention. I think it's going to be very challenging. I never said it was going to be easy or straightforward. It's going to be challenging. The events of the last few months have certainly been challenging. And nonetheless, there are pathways through which that can, in particular.
God, I forgot how ADV trades. It's still, obviously low volume.
Was
but
very strong demand surged against
it's so fucking slow.
Prices went up a lot, much more than could be explained.
But yeah, I'm up 320%.
You rolled all the way over there.
What?
Oh, I'm talking about my son.
That path just
Your son.
In principle, one's guaranteeing that, but the idea is this is not the same. There are relationships in how quickly inflation compared to demand. This could be an unusual situation.
Why are we pushing here?
Vertical supply curve where there isn't any more supply or a pretty steep supply. So you get really sharp
Still makes sense.
prices. You could get sharp declines for the same reason. So that could be a difference. And I think find out ideally. But ultimately we need to see progress on the supply side. And we're not waiting for it. Our job, our tools, work on demand. And that's what we're working now, is getting demand.
There's a 37.83 retest. So we're going to hold below it.
And is in better balance with the. Oh, thank you.
Thank you, Senator Daines. Senator Ossoff, on behalf of the chair.
Thank you, Senator Tillis, Mr. Chairman. Welcome back. Let me state at the outset, you have an extraordinarily challenging job in extraordinarily complex times, and much of what you are responding to and adapting to is beyond your control. Your success is country's success, significant success, and I really hope for your success. Appreciate your continued efforts. I'd like to ask you to specify, if you can, what transmission mechanisms you believe are most sensitive right now to the change in monetary policy? What forms of consumption you expect to be most sensitive to it, and the extent to which you anticipate that some of the effects that you demand through the increase in rates are transmitted via financial market. If so, how?
So I guess I would say three basic channels through which our tools work. First would be interest-sensitive spending. So that's durables, including cars and things like that, durable housing, for example. So when rates go up, spending on those purchases, which tend to be financed with debt, will be restrained. That's one major channel.
The Apple?
The second is just
It's been sitting out for 3 days.
Across the economy, when interest rates
Got
go
fizz.
up, it raises the cost of holding assets, cause assets, again, broadly across the economy, either moderate their decline somewhat in value. And that has an effect on, broad effect across the economy on spending, on everything. The third channel is really the exchange, which you can think of as another asset price, but that also has the effect of pressing down on inflation. So we look at all of those, starting with the first one. You can see we just talked about the housing market. The housing market is the classic. It's very sensitive to interest rates, and you're going to see a moderation in. You're going to see declining, slower increases at least in housing prices. So those are the three main channels I would point to.
Let me ask about in terms of asset prices and how finance are responding to Fed's stance. I've consistently asked you and Secretary Yellen to talk about systemic risks, risk to financial, risk of financial contagion, where you're moving swiftly and volatile, perhaps institutional trades, exotic financial instruments that no longer function well. What do you anticipate?
Breaking that with 3783.
Yeah.
Parts of capital markets now
that
present the greatest risk to financial stability as the Fed takes the aggressive action that you're.
Well, I'd start by saying that the banking system is very strong. What capital is highly does a much better job of understanding the risks it runs and managing them than before the global financial crisis, and that's a reflection of that regulators did and banks did too. So that part of the financial system
closed over. Dadgummit.
Critically very strong, and we saw that through the pandemic, and we see it now. To your point, though, capital markets did show real periods of illiquidity during the immediate aftermath of the pandemic, and so we've been looking at ways. The regulatory community has been looking at ways to address that.
So you remain concerned about money markets?
Well, that's a different. So money markets that's a part of the economy which where it has become illiquid because the assets that they were invested were not able to be turned into cash quickly to fund depositors wanting to take their money back. So we stepped in and had to provide that liquidity. The second time, there are reforms going on, which should, and they're in the process of being considered and then implemented. That should. Thinking more of the Treasury market, for example, where which it became illiquid very beginning when people wanted nothing cash, cash and most cash-like things. Treasury market has been functioning though all through this period, would very significantly change this functioning reasonably well, and
okay, my time's running short. Appreciate that. We'll probably follow up to talk a little bit more about financial risk with my remaining few seconds. Let me ask you this. How would you characterize the share of responsibility, if you will, on the supply side versus the demand side, the elevated price levels over the last year? To what extent do you believe that, you mentioned the supply curve being steeper than expected and some of the increased durable goods demand and consumer demand having a greater than expected effect on prices right now, is the principal driver of the increase in the price level elevated consumer demand, or is it supply constraints? I know we're facing both.
You see officially done. Is there a time limit?
As you can, some share to each phenomenon.
Yeah, I just would say it's
both factors are principally at work here. You couldn't get this kind of high inflation without strong demand, and you certainly get it without the supply issues, both in the labor market reflected in wages and then in the goods market. What's happened with durables and cars in particular, it's been the semiconductor shortage. Thank you, Chair Powell. Thank you, Mr. Chairman.
On behalf of the chair, Senator Moran.
Mr. Chairman, thank you. Chairman Powell, thank you for your presence here today. Let me start just by making certain that I tell you something that I need to say on behalf of Kansas. I've never seen anxiety,
377.96, and I kept saying 380.
as I see today when I have conversations with folks in my neighborhood and across Kansas.
His wicks are ticking me off.
Right, inflation is a significant component of that feeling, and the inability to know what's around them is terribly damaging to folks, both financially but also mentally or psychologically. There's a real circumstance out there that I want you as the chairman, colleagues, to know exists. It is, I think, uncertainty and future hold most damaging things when people figure out their lives and how comfortable they are. I also want to highlight a particular Kansas, but middle America, across the country, issue of agriculture. I was on a farm on Saturday, participating in, observing harvest of wheat. We live in a world in which people are starving and starve. If we are unable to, if we fail to get more grain into markets, grain in from Russia, but the United States is agriculture, farming is a noble thing, and it has a lot to being able to feed people who are now desperate. Part of the concern is that interest rates have a significant consequence to the profitability, to the survivability of producers, and profit margins get squeezed. Interest rates continue to climb. We face declining or lower land values. That creates greater access to credit challenges. Tell me how you see, one, how I can assure Kansas that and Americans that things are going to be better, and two, how can I assure farmers and ranchers that the future will be brighter based upon the activities of the Federal Reserve? So I take the sort of very low confidence readings that we're reading about and your comments about Kansas citizens as being pretty directly to high inflation. And I think people haven't seen it. You know, most people, you and I, enough to remember what it was like, and it's it just really does destroy public confidence in the economy. So we need to get inflation back down to 2%, and all I can say is we're using our tools to do that, and the public should believe that we will get inflation back down to 2% over time. Again, there are factors that we don't control. Prices don't keep going up. They may remain high, but they're quite volatile. And that's what the report shows. So we're doing what we can to get inflation down, the parts that we can address. So whatever that's worth, that's what we can do. In terms of the agricultural patch, as you know, we have, including Kansas City Fed president, we have some terrific Reserve Bank presidents who give us a good sense of what's going on in the agricultural sector on an ongoing basis. And it's obviously a very, very time with fertilizer prices and difficulty in getting inputs. And it's just a very challenging time in the agricultural world. You understand that. Our part of it is to do what we can to get inflation back. No higher painful, but that's the tool we have to moderate demand and get demand and supply back in balance so that inflation can come down. Mr. Chairman, in a conversation you and I had on the phone, you indicated that, as you did today, there are certain aspects of inflation that you have little control over. One of them, I think you mentioned, was energy. Let me be reassured, if you would, that there are no, that there will not be actions by the Federal Reserve to make lending to fossil producers a component of the policies of the Federal Reserve. But if you say you have little to do with, you could cause great damage if you decide to go down a path that was at least contemplated by a number of nominees for the Federal Reserve. And I would love to be reassured that's not a component that you would pursue, and that we would not see resulting increasing a cost of fuel as a result of federal policy, Federal Reserve policy. My view, and I think that my view certainly is that it's not our job to allocate credit to or against or away from any particular sector of the economy. That's a job for elected officials, but it's not a job for the Federal Reserve, which has a mandate to, pursue maximum employment, price stability, well-regulated banking system, and a sound payment system. Mr. Chairman, thank you.
On behalf of the chair, Senator Warnock.
Thank you very much, Mr. Chair, and thank you, Chairman Powell. Here again today. Georgia is in a serious housing crisis, and the Federal Reserve Bank of Atlanta designated owning a home in Atlanta as affordable average home buyer. It's not just a city problem. It's urban. It's Haralson County, a county with a population of 30,000, is also rated as unaffordable. In the midst of this housing crisis, the Federal Reserve Bank, which has a tough mandate and a tough time of managing inflation, has raised the federal funds rate by 0.75%. Are about to get a lot more expensive for families. Chairman Powell, as the Fed raises its interest rate, what is the Fed doing to prevent the rate increase from further exacerbating housing?
Well, so by raising rates, we're clear. What you're seeing is a slowing. You're seeing because of higher interest rates, mortgage rates have gone up pretty substantially, and you're seeing a slowing in that. And that should mean, one of the things that should mean is prices should stop going up at such remarkably rapid rates. Since the beginning of the pandemic, we've had, a very, very hot housing market all around the country. And, what should take place is demand for housing moderates for new and existing homes. You should see prices stop going up quite so fast. You're also going to see fewer home sales, just a lower rate of activity in the house. So really, what needs to happen is housing supply back to better alignment, and the part of that we can is real by moderating demand, so that prices stop going up quite so much, and then get back to a housing market where supply and demand.
SPY is forming a double.
There are issues
Looking for that M.
Housing supply. It's harder to get land and lots and things like that. It's harder to get people to work. So there are supply side constraints. If you meet with builders from around the country, they will tell you that they have a longer term issue in the country around creating enough housing supply. That is not something that the Federal Reserve can do anything about, but it is an important issue.
Notwithstanding that, mortgages, at least in the term, are about to get more expensive. And it seems to me that what would be helpful is if Congress would pass my down payment for equity.
Oh my gosh, you're endorsing your
buyers for their first home. What effects do you expect?
Be right back, guys.
Fucking back to my computer.
Y'all think we're close to a short level?
Yes.
I'm about to, yeah.
There's a lot. There should be 2 left.
Are you going in anything, Royal? Besides those longs? Like, but you're in December puts, right? Okay. Are you gonna play anything today, or are you just waiting? Are you gonna play anything today, or are you just waiting? Oh, nice.
Make more money, Royal. Make more. Get that Lambo, bruh. Make enough money to buy Jordan's boat, okay?
Bro, you there?
Nick, was that you earlier who wanted puts? No, he's not in here anymore. I think Nick grabbed some puts. I wanted to see how he was doing on them. Such choppy movement.
Do you think we'll break it?
Honestly, I'm kind of scared. If we hold 374.92, if we actually seriously hold there nicely, this could reverse hard and we could see 380 today, maybe. Free spy? That's what I'm more so looking at. Oh, I kind of forgot Powell's speaking right now. He was just asked about the 100 BPS rate hike. and says, we'll never take anything off the table. We could have a
I think Spy just broke. Killing it.
We're now flat. Well, we're kind of approaching the 50 EMA on the 5 minute on SPY.
You guys still in puts?
At the top?
You think we're going lower or not?
Let's see. Let me take a look at ES here. We are forming a higher low or a lower high, if you want to call it that, on the 5 minute on ES. Might be able to see. Let's see. Yeah, we're going lower. We might come back down to about 374.
$374. Nothing much. Chilling. How about you? Oh. I thought you said, hey, friends. Hey, Professor.
We're right back above my 375 level.
Yep.
That was a nice bounce. We're was ran between our 38.2 and 23.6 fit levels. We could see a rejection off of 376.42 to 376.10.
Yeah, this is one of the daily key levels right here. Because he bounced off this around like 10:40, no 11.
That's a really decent push we're getting here. I see a little bull flag here forming on the micro scale of things. If we break out of this bull flag on the macro scale, this could lead to a continuation or move upward here for the next couple minutes. Ball flag has been invalidated, guys. EKNG is pumping, man. Wow. Wow, I barely missed my take prof, my short level there. Oh, that's disappointing. So, yeah, 181.75. Oh, some weird volume's kicking in right now, guys. Getting some whacked out volume. This movement sucks.
pumped. Wow.
I'm gonna make the move to 3,800 here. It's pushing, it's filling that imbalance we had. Where we dropped down pretty fast there. There are decent sized candles here forming. Decent candles with good volume. No imbalance. Perfectly in agreement right now. We just have so many levels. I see kind of a bull flag here forming actually. Actually, the more I look at this, kind of see a bull flag forming here. We were just retesting off of that and we're going upwards now. Coming crazy. I'm going to be looking for some spy lottos here though. Let's see here. Where are these? 380s? 16 bucks. Why not? Copy. Let's see here. Yeah, I'm buying one of these. This is complete lotto.
Ah, damn it, this is taking it off.
Fed's Harker, we're getting mixed signals in the economy. Okay. Fucking.
About 390. I think this is gonna go 3,800 here soon. Seems like we want it. Ooh, spy popping. There you go, device. Let's go. $3,800 here. Dude, we're just not hitting. We want to hit 3,800, but it's just teetering on. It's literally right here. The rejection. That's hilarious. Netflix random pop. What a pop. Wow. What a pop. News came out about Biden suspending the gas tax. 18-cent gas tax for 3 months. I think crude oil just absolutely plummeted off of that. Let's see. Nope, it didn't. And we hit my 3,800 mark now, so. Yeah, this is flying. Fuck, I really wish I got filled on those 380. Alright, yeah. Fuck, I shouldn't have canceled it. Well, I'm seriously picking up here, guys. Evans, no need to push back rates to 6% as Fed did in 1995. Back then, inflation was regularly higher. Or, sorry, was secularly higher. Regularly, I don't know how to miss that. Volume is decreasing here. Biden, these actions can drop prices at the pump by $1 a gallon at the pump. Wow, let's see if we can get that. I'd love to see a fucking dollar drop in gas. That'd be amazing. Wow, look at that. Look at that drop occur. Vicious. That was strong. I knew it. Wow.
Anybody watching this?
Yep.
I was wondering when it would get there.
I was talking about 3800 and I was looking at calls. I had signaled for a lotto for 38 for 380 calls at 0.15 and then I decided to cancel it.
Yeah.
The lowest they went to was 0.04, but then they absolutely soared all the way up to 0.33 and I was like, fuck.
I'm debating. I mean, I wonder when the rug pull's gonna be.
We're just bouncing off very important level. Today is very technical right now.
Which is crazy.
I'm loving it.
And low volume.
Very low. Very low. It's actually very boring.
Yeah, summer volume. Second day of summer.
Very true. Have you played anything yet or no?
Yeah. Yeah.
Yeah? Is that a bad thing or what?
Well, I've done some alright stuff, but what did I mess up on this morning? And I'm down like $200. But Powell Day just is annoying. And then this morning when everybody hit, a big one together, I was out of the room, so I missed that. And then when we did, what did we get at when it was pumping like crazy? That's where was it? I think it was like 37.85 or something. We just blew through it.
Oh yeah.
And I missed one by a penny that would have put me up like $700. I mean, it's small misses.
Yeah.
I'm trying to think where we bounced off of. Because I think we end going up. I think. But I don't know. It's scary.
Well, we're bouncing off my 377.53 fib level here.
We're about what?
We're bouncing off my 377.53 fib level here.
Yeah.
61.8. So, based on that, we should technically continue upwards here.
Yeah.
Technicality, but
I wonder if they're gonna just trap us and just let everything expire worthless. See if it bounces. We close below that level. I'm thinking about going short.
Thinking of going short here soon.
Well, I mean, if we close below that 377.57,
Maybe.
but if we close way below it, I won't. What do you think we do tomorrow?
380 for SPY. Yes,
You think so? Yeah. I thought about swinging something overnight, but I don't know what.
Why would you do that?
Well, it depends on where we. Well, you know, if we usually if we've closed high a day, yeah, I think like the past, like 90% of the past ones, we closed right at or around high of day. You know, we opened red the next day, and vice versa. So I was thinking we skyrocketed at the end, and then I was played short, but I hate all this Powell crap. is like watching paint dry. Worse.
It's so bad.
Watching paint dry doesn't cost me money. Ugh.
Wow. 78, 77. Wait, move upwards and missed it. Alright, let's see here. What contracts are good for some of these 379s? Copy these ones over. And I'm really liking these 376 puts too. They're both sitting at calls at 20, puts at 36. And they are higher on the put side right now. you.